Good afternoon. This is Brian Splitt with Allendale, and here with your closing commentary on Friday, November 5th, 2010. We did finish up the first week in November on a positive note for some of the grains. Both soybeans and wheat were higher today, but the corn market just couldn't turn up the heat here with the other markets firm. Looks like the December corn was down 2 1/4 at settlement today. That was at 587 3/4. That is up 5 3/4 on the week. The December 11 contract was up 3/4 of a penny today at 555 1/4. That's actually up 13 1/4 on the week. And a lot of this week we did see some bear spreading somewhat prominent here with a little bit of buying of the deferred contracts and selling of the nearbys. And that was also noted in the soybeans as well. On the soybean side, we did have January up 9 1/4 cents at 12.84, and that was actually up 48 cents on the week. The November 11 contract up 6 1/2 today at 12.22, up 49 on the week. On the wheat side, we'd had December nearby Chicago's up 15 3/4 at 729 1/2. That was up 12 1/4 on the week. The July 11 new crop contract up 16 1/2 today at 803 1/2, and that was up 19 3/4 today. So a good strong close over $8 there. As far as the story in corn, we had a little bit of light profit taking after testing $6 on yesterday's rally. We're still holding the 580 level, which is supportive. Last week we built very good support at the 560 price. A lot of active buying down there. Early buying this week at the 570 level, and we did make some new highs this week, continuing this bull move. We are watching a little bit of weather dryness in the Cordoba region of Argentina, so just keeping a close eye on that. But weather in Brazil at this point seemed mostly favorable at this point. Otherwise, on soybeans, we rallied. Really, there was some trade in China that was supporting the soybeans today. We had the palm oil and the soy oil contracts on the Dalian exchange trade limit up. So we are seeing a lot of strength in the veg oil contracts at this point, and the soy oil today did help support the soybeans overall, with meal actually closing lower. So a little bit of spreading on the buying of the oil and selling of the meal. We also had crude staying firm today, even with a stronger dollar, so that lent support to soybeans and the oil in general. And with no deliveries on November contracts and continued firm export pace, that is going to keep the soybeans bullish here short term. On the wheat, we did have some technical buying, and really it's driven by ongoing concerns about dryness in the plains here. So these new crop, both the July Chicago and Kansas City contracts closing very firm and closing into some new highs here, taking out these highs that we put in back in August on the Russia story. So those markets do look bullish on the charts here. The rallying with the strong dollar also makes those contracts look a little bit stronger here. So these are going to be very important things to watch as we go into next week's report here Tuesday morning. On the livestock side, we did have both hogs and the cattle trade mainly mixed here today. We were seeing a lot of rolling here. Product was up for the hog side for the fourth day yesterday, and the cash hog markets are improving at this point. We are seeing a large premium with the futures to the index, so that may limit the rally at this point. And there's also some concerns about Russia's plan to ban the frozen poultry, so that could also keep a limit on any rallies that we do see. On the cattle side, again, there's been some rolling there. Cattle did trade at 98 per hundredweight this week, and that's down $2 from last week. Didn't really hear any trade today, but we are looking for a little bit further pressure next week. That is the call. And yesterday's wholesale box beef was at the lowest level since October 19th, so that is something of note. As far as the outside markets, it looks like the equity's still trading just about unchanged here on the day, a little bit lower on the Dow, a little higher on the S&P. So mixed overall. Gold was strong today, as was silver. Gold finished just over $14 higher today at $1397.70, so we're knocking on that $1,400 door. Allendale did have the recommendation to buy the December contract at $13.73. which was filled this morning. So we're looking for a push through this 1400 area short term, and profit objective just under that 1450 area, risking about $30 on that trade. So if this market does continue to trade firm and push through 14, we'll look to move that risk point a little higher here next week. On crude oil, up 36 cents at settlement at 86.85. The chart does look friendly there, and we've taken out some downtrend resistance lines here over the course of the week. So a little bit of higher trade will make this continuous crude oil chart look friendly, and we do have a short-term target up in that $90 area. Other than that, the dollar index doing a little recovery today, up 70 points. But still overall, we're going to see some volatility in that contract based on the Federal Reserve's announcement earlier in the week to invest $600 billion. So that $600 billion was apparently enough to keep the investors that were concerned that the stimulus package would disappoint, enough to soothe their concerns and have money pour back into the markets again after that announcement. So we're going to expect a lot of volatility on Monday as some of the actions that the market has taken after the Federal Reserve announcement are reassessed. And again, we're going to have the USDA report for the grains on Tuesday morning, so that'll also add to the volatility. But if you have any concerns about maybe any unpriced grain or some sales that maybe you made that you feel that are a little bit too low that you'd like to get some reownership of, we do have some strategies that we're implementing ahead of the report. So feel free to give us a call at 1-800-2-MARKET. That's 1-800-262-7538. You can look us up online at www.allendale-inc.com. And one last thing, we would like to again invite you to our conference. It's going to be January 21st and 22nd, which is a Friday and Saturday. So if you have interest, you can sign up online, or again, give us a call or one of your local branch offices a call. And again, this is Brian Splitt with your closing commentary for the week. Good luck trading next week. Thank you.